Hello and a very warm welcome to everyone. I am Shrija Agrawal and you are watching the Mint special series Mint RegTech Conversation, Demystifying Regulation and Technology. The financial industry is no longer stranger to technology compliance with regulatory requirements. Managing regulatory processes within through technology has been termed RegTech or regulatory technology. RegTech is used to cover innovative digital solutions via AI, biometrics, machine learning, and big data so that compliance could become efficient to facilitate regulatory reporting, compliance, and monitoring. But it is not just this quick moving development of innovation that undergirds the rise of RegTech. It also is the massive cost of compliance that affects the cost of doing business. India has a long way to go to acclimate to all the digitization and disruption. There have been various disruptions, cryptocurrency being the most prominent one, which really is at the heart of all conversations right now. They're yet to learn how to aptly regulate and navigate these unknown waters or the unknown risk, as it is called, as we are jolted to our black swan blindness. How will India absorb the potential of blockchain tech and its cross sector applications? Will aspects like trade finance be able to even adhere to monitoring obligations, even if India were to able to be very quickly adapt to the required RegTech revolution? How will India cope up with the de-bureaucratization and automation that could be induced? Thus, very happy to put together a compelling thought leadership platform with none other than India's largest and the oldest law firm, Ketan and Company, or the Mint RegTech Conversation, Demystifying Regulation and Technology, to discuss, debate, deliberate, and perhaps come with some solutions on some of these ideas which require such kind of conversations. We're doing this in partnership with Ketan and Company, and our first dispatch is talking about deregulation or demystifying cryptocurrency regulations in India. Please have me welcome two partners from Ketan and Company, Sudipta Bhattacharjee and Sanjay Nagra, to help us decode some of these trends. Sanjay and Sudipta, welcome to the show. My first question, and before we begin this conversation, really is that I would like to thank both of you, and it's my sheer pleasure and privilege to welcome both of you to this conversation. I think it's a good idea to begin this entire narrative with a very open-ended question: is that cryptocurrency isn't really a legal tender yet, and if you transact in crypto, it's still kind of illegal, and regulations are still being formed. That has really meant that there's a constant slugfest between the entrepreneur slash the investor fraternity and the regulators. So, what really is the missing piece here? Sanjay, I can begin with you and then come to Shubhito on this one.
Yeah, sure. Hi, Shrija. Thank you for having us here. I think I think it's always a tussle between uh, the fear of the unknown versus accepting and something which may have certain impact which you are not really sure of. So, for instance, if you look at the government dilemma today, uh, it is really in a difficult situation where it does not know how probably allowing cryptocurrencies will play out. At the same time, there is innovation. Forget cryptocurrency for a minute. Uh, for any innovation of any nature, it is always a dilemma of not knowing what that innovation will do in an actual world. If there is a particular app which permits people to interact in a particular way, we can take example of our cab aggregators. When they first came on the horizon, it was very difficult for regulators to accept that the existing notions of a person owning a taxi and another person just hiring the taxi to go from point A to point B would be taken over by an app-based aggregation model, wherein ownership is with somebody, driver is somebody else, the person connecting the two is somebody else, and the person connecting payment and distributing the payment might be someone else. So I think it was only after the government saw for an extended period of time as to how cab aggregation is actually beneficial to people overall, how it is bringing down the cost of travel, the road congestion, etc., etc. And that is when, and the government also realized, with the help of the entrepreneurs and some certain teams or certain evangelists who are helping the government figure out how to deal with these aspects in a regulatorily compliant way. And that is after those efforts of 4 5 years, that the government came out, and that was a state subject, and therefore various states came out with regulations, and finally we have a robust sort of a regime across various states for cab aggregation. I think we should take a cue from there, and that sort of becomes a playbook that applies on each innovation. Now, how cryptocurrency and some of the other innovations which will happen in future are different from, say, cab aggregation is cab aggregation was not that fundamental a change or into what was happening already. It was a change, yes, but it was not a fundamental change of the nature that cryptocurrencies are, right? And therefore, cryptocurrencies become that much more difficult to regulate for the government, even if they want to slot it into one of the categories of existing regulations. It is a difficult problem for the governments, and not only for the Indian government. Governments across the world are facing similar problems. However, I think we understand, everybody now understands what the regulatory concerns are, problems are. Now I think is the time when we need to figure out a way to solve that, and figure out a way to regulate and do something about it, because this regulatory limbo cannot go on forever. We can't just sit back and say that okay, fine, we'll see how it plays out in the unregulated space for next 5 years and 10 years, and then see what to do about it. Because we have seen in the past 5 6 years, and we can discuss about it as we go along in this conversation, as to how the government has been sort of non-committal to regulating it. There have been talks of banning it formally. There were legislations which were proposed. RBI came out with certain circulars. Then Supreme Court ruled on those circulars, etc., etc. And now we are in this regulatory vacuum where right now nobody knows whether it is right, wrong, or will it be banned, will it not be banned, etc. So I think right now the most important concern from if you ask me, my biggest concern would be if there is somebody in the government who would be looking at ways and means to understand this technology on a daily basis, because this is a very evolving technology. It changes every day. We had cryptocurrencies until now. Now we are entering into the regime where NFTs have become mainstream, as we call it, and we don't know where it is going to go from here. So somebody has to really track it very closely, and then make sure that the innovation is understood by the regulators, and this divide between the regulators and innovators is sort of bridged on a regular basis on various fronts, and cryptocurrency should be a good start there.
Okay, thanks for that, Sanjay. I would like to sort of bring you in, Sudipta. We just heard Sanjay what he said, that there should be no room for regulatory vacuum, and this entire status of regulatory limbo should not continue for long. And this constant slugfest between the innovator community and the regulator community has to come at a common ground and solve and come up with some solutions. And he also gave the example of how perhaps we navigated our way in the cab aggregator space. I wonder what really are your opening points to this conversation.
I mean, I mostly echo what Sanjay said, that this is clearly yet another example of technology outpacing laws and regulations. And we have had multiple such scenarios earlier, one of which is the Uberization, as we call it now. And so we have had that 4 or 5 years journey. I think it's high time. I mean, crypto also has had that journey. Has We have spent that time with crypto, I think, in India, and it's high time that the regulatory vacuum is ended. And I think that that is indeed the missing piece. I will, sort of take off from here into the realm of taxes also. If I, it's not only hurting in terms of the regulatory vacuum. It's not hurting only in terms of permissibility and regulation. It is also hurting in terms of taxation. Now, the thing is, many of these new technologies are live as we speak. They are not waiting for regulations to come up. They are not waiting for law to catch up with the technology. It is happening. And since taxes go with the transactions, we need, I mean, at least from the taxation perspective, probably we need clarity, faster, and in greater detail than probably some of the other aspects of regulation. So I think I'll add that particular nuance to the opening remarks made by Sanjay.
Thanks for sort of bringing that in the taxation bit. And I think both the partners agree, and there's a unanimity sort of coming into conversation that the missing piece definitely is a regulatory vacuum, the regulatory limbo, and that has to be solved for ASAP. Good that you brought the question of taxation, and that's a great segue to our next question, really. And that really is about this cumbersome licensing process, that essentially makes crypto services operating in India also lacking a lot of clarity. The chairperson recently of the CBDT believed, it was quoted, that people should pay taxes on profits they get from Bitcoin and they should be taxed. Others say that profits should be taxed as capital gains. What's the viewpoint of this panel in this regard? Maybe I'll begin with you, Sudipta, on this and get on to Sanjay.
Sure. I think so. I'll break it down because in India we have two taxes broadly, direct and indirect. So I'll touch upon both. And essentially, if I sort of go to a 10,000 feet level, it's a question of which box do you slot cryptocurrency in. Let's take the example of, let's start with GST. In GST, we have these categories like securities or money or actionable claim or goods and services. Okay. If we look at the way some of these terms, securities, money, actionable claim, have been interpreted or are defined under GST, cryptocurrency may not qualify under any of these heads. And then it may fall under goods, even though it's an intangible, because under tax law, intangibles can also qualify as goods. Once that happens, there are very disruptive sort of ramifications to that. Because then what we are saying is, when I'm using cryptocurrency to buy goods or services, it is somewhat like a barter. I am providing a good in order to obtain a goods or service. And that barter is uncharted territory effectively under GST. It's a relatively new concept that has been taxed under GST, and various ramifications, including valuation, etc., follow. Another sort of concept or another sort of touch point is, when say an Indian developer, software developer is or game developer is doing it for a foreign client and is expected to get paid in crypto. Typically, when you export goods or services, let's stick to services here, you get a lot of tax benefits, refunds, etc. But all of that is tied to qualification as an export. And that is tied to receipt of the fee in convertible foreign exchange. If you try to look up convertible foreign exchange, it has to be interpreted in light of FEMA, and it has to be in light of something that RBI recognizes, and RBI clearly does not recognize cryptocurrency. So what we are saying is, if you are getting paid in crypto for export, your export benefits can be gone. So I think that is something on which we really need clarity on very quickly. And we have precedents. We have precedent from Australia as well as UK. If we look at it in Australia from July 1, 2017, now that's a very ironic date because that's the date India started with GST. So from July 1, 2017, Australia amended its GST law and clarified that cryptocurrency is like any other money. So when you are using cryptocurrency to buy goods or services, there is no additional implication. It is akin to buying it with money, and we will use the valuation closest to the point of the transaction of the cryptocurrency that you're using. There is no separate GST or Australian GST that you pay on acquisition of the cryptocurrency. When you're buying it from an exchange, you don't need to pay GST on that transaction, which is a very, very critical and important clarification. And similar clarification has been issued by UK. The HMRCs, they have issued a manual of crypto asset guidance, which also basically echoes the same thought, which to my mind are very good and laudable precedents that India can adopt. I mean, if Australia had done it in 2017, 4 years have passed, we have enough experience to draw upon. And to that extent, I would think that's a good precedent to sort of follow. Coming to, on the income tax side, I mean, we have the same issue. How do we slot it? Income tax laws also do not specifically categorize, deal with, cryptocurrency as such. They have been treated as digital assets in most countries. As per public domain information, UK, US are treating it as capital assets. So an Indian definition of capital assets is fairly wide enough to do. I mean, they can cover crypto in capital assets. In which case, if you're holding it for more than 3 years, it becomes long-term capital gains, etc. You pay tax at 20%. But then, if government does not agree with a capital asset classification, then it becomes income from other sources. In which case, it will be as per your slab. And if your taxable income is more than 10 lakhs a year, then we are talking about a tax rate of 30% plus. So if and so that's the sort of dichotomy, or that's the impact of lack of clarity. So it's, I mean, laudable, and we all agree with the government and the CBDT that we must pay taxes. But how? I think unless we know where to slot this particular thing, that the government has to help us with, that the regulator has to help us with, and probably, as I said, quicker than other regulatory aspects, because these transactions are happening in thousands, if not more, as we speak.
Okay, that's a pretty fair point, a pertinent point brought to the fore here, Sudipta. And I want to sort of get you, Sanjay. What one really understands is that perhaps the head or the box seems to be missing. I mean, there's a huge want of identity for cryptos. I mean, how do you identify them as? Is it a good? Is it a service? Is it a security? What Sudipta pointed out. And perhaps there could be a playbook that could be followed. He gave the example of what Australia did. But right now, we are at the fundamental question, the beginning, the starting point essentially, that how do you identify this animal as crypto? And it's high time that the government did that. I want to understand from you, what do you think is the possible or the most sort of plausible framework for identifying crypto?
So no, absolutely agree. There are issues in classifying it as any of those. It is probably some form of goods. It is probably some form of securities, commodity. It could be some form of store of value. It could be a payment instrument, security. It could be a derivative, or it could be a mix of all of them. And that's really been the problem. And I completely agree, Shrija. We cannot really wait forever to arrive at a conclusion here. It is difficult question to answer. It is it is very important for all of us to realize that just because one particular nation state has agreed to do it in a particular way, we cannot really follow that because of our internal issues. But having said that, we need to make sure that what we classify it as in India is something that is at least similar to other jurisdictions, if not the same. Let's take an example of GST that Sudipta talked about. We have Australia, we have UK who have taken a particular position, and that appears to be a reasonable position in the way people are treating this phenomenon, right? Whether law has caught up to it or not is a separate question. But let's just see first how the people world over are categorizing it and treating it as. And they are really treating it as store of value. They are treating it as something which is transferred from one person to another, then to a third person. In between, people gain value and make some money, etc. Some people are using it as a tender, etc. So I think it has to be a mix of all of them. And if required, government can come out with a new definition, like the prepaid payment instruments, the wallets. We did not have, a regime of wallets, etc. earlier. Now we have that. We can have something similar where government can define it as a particular matter and regulate it as such. I think that's how we need to figure out a regulatory regime.
Okay, so essentially there are no clear answers, is what I'm gathering. It can be a mix of various asset
It is a mix.
classes. Or
If you look at it, it is a mix of a lot of these. It is a mix of a lot of these categories, and therefore there is no choice before us but to define it afresh and say that cryptocurrency means ABC, etc. Because the moment you define it as goods, we have a lot of problems because goods are treated in a particular manner, and cryptocurrencies are not meant to be treated as goods. They were never meant to be goods in the first place, right? They are not meant to be exchanged as goods or for barter, etc. There is a separate use case for them for which they were built, and we need to, and because that use case is a very unique use case, very innovative use case, there has to be a very unique definition that applies to it. It is not currency. Therefore you can't really, because it's not legal tender yet, until until the governments come together and recognize it as legal tender, it is not currency. Yes, it discharges functions of currency, but it is not currency. Yes, it has some attributes of goods, but it is not goods in complete sense. And yes, it has some attributes of securities. It is represent like a demat share, and say one Bitcoin is probably for some aspects of theirs is the same thing, but it is not security in completeness, because it is not representing something which is representing a share, or something in a particular company, or an entity, and which is why we need a separate definition of it altogether.
I think,
Yeah,
Shija,
so I
one
think
point I'll just add, which I missed out on. One of the debates in the income, I mean, tax space that is happening is also whether equalization levy should apply on Bitcoin, or, I mean, cryptocurrency. If, say, an Indian resident is buying from a foreign exchange located outside India, whether that, for because equalization levy, last year the net was cast so wide that effectively, all sorts of e-commerce based supplies, etc., can get covered. So there is a thought process that equalization levy might also apply, and then we are talking about a straight away a 2% additional cost on purchase of Bitcoin from cryptocurrency from outside India, which is also, I mean, in the multiple areas of lack of clarity, I think this is one addition that I wanted to point out.
So I think what I gather that there seems to be a complete vacuum when it comes to cryptocurrency, starting from its definition and perhaps stitching together a constitutional framework for it, if you will. Because when something does not really have clarity on its existence or its identity, how do you sort of carve the path forward or the way forward for it? And I do understand, as what Sanjay sort of pointed out, that perhaps crypto is a unique thing in that manner, where it has attributes of various things combined. So, how do you define this? And government definitely has a difficult task at hand in this regard too. I think my question, I think we have a pretty interesting and very insightful conversation so far. We began with this missing piece in the slugfest between the entrepreneur, investor community and the regulators, what really is holding them back. Then we also spoke about the taxation bit, the identity crisis for cryptos. Now let's talk about this entire narrative building around virtual currency, which essentially is the extension of what cryptocurrencies really are. In 2018, RBI actually said reportedly that it did not issue any licenses to deal with virtual currencies, and there would be some ban, in fact, on crypto for domestic exchanges. In 2020, this ban was deemed unconstitutional. Now they're open to actually exploring blockchain to aid in financial services. My question to this August panel really is that why is it always a case of one step forward and two step backwards with crypto? There seems to be an eternal tango here. I'll start with you, Sanjay, and then go to you, Sudipta.
No, like I said, the and may I just make one more point on this? One, so let me bifurcate this into two buckets. Bucket one is the entire developed world, which is also struggling with the problem of regulating crypto, right? And they are struggling because of the inherent issues that come with an incomplete regulation, right? Because ultimately it is something which is not a country specific innovation. It is not like cab aggregators have come in India and started aggregating, so Indian government can decide how to allow them, and US government can decide how to allow them, and they can operate in their spheres. Here, because those cab aggregators are operating in two separate jurisdictions, each one of them can decide how to regulate them. And there could be two separate regulations for cab aggregators in two different countries. Here we are talking about something which is everywhere, all pervasive. It is all across, and equally accessible from all countries, and equally tradable in all countries, and therefore there has to be at some level some uniformity of approach, and which is what the countries world over are struggling with. In India, the problem compounds because of the way India as an economy is structured. And India is not an open economy such as the US, for instance. India is not a very closed economy such as some of the say one example is China, North Korea is extreme example, but China is one example that we can probably. So we are somewhere in between. We are a semi-open economy, which means that our rupee is not fully convertible, but it is convertible in certain areas where the Reserve Bank permits it. So Reserve Bank keeps a very close watch on the money that comes into India, the dollars that come into India, and the rupees slash dollars that go out of India. And that compounds the problem for India as a country vis-a-vis Western world or developed world, or open economies, and India being the semi-open economy. If so, for instance, if certain economies which are completely open don't really have a problem of flight of capital, if somebody converts crypto USD into crypto in US and then transfers that to Singapore and then converts that into Singapore dollar, it is all fine because USD was anyway convertible into Singapore dollars in the first place, freely, and there was no issue. But Indian rupee is not freely convertible into Singapore dollars. You have a 250K limit per person to take out money. There are permitted use cases for which you can use the money, etc. Now this poses another layer of a big problem for Indian regulators to look at the entire issue. And I think why there has been no concrete step on this is probably because of these multiple issues that come together before the regulator in India. And it's a very difficult problem if you think of it that way. But I think if we talk about solutions here, I think a lot of discussion has happened in this panel and otherwise also on what the problems. I think in terms of solution, at least when I think of it, if I were to be asked to say work with the government and do something about it, I would probably say that we sometime back came out with sandboxes for certain innovative products. There are regulatory sandboxes, both SEBI and the Reserve Bank have sort of acknowledged them, and they're provided for their respective regimes. We did come out with a very holistic regime for Gift City in Gandhinagar, which is considered to be an international a place which has international status within India. So investments which are made out of Gift City are given special treatment from a FEMA and a tax perspective. So why not use some of these innovations within the regulatory regime that we have? Let's have a combination of, say, a regulatory sandbox that, say, the Reserve Bank or maybe both Reserve Bank and SEBI come out with, and implement it in the Gift City. And because it's about flight of capital, which is a primary concern for us, and the other concern is, say, tax. The third concern is usage of money. Let's make sure that we work with, say, the regulators, the regulatory sandbox, and the innovators on the other hand, and work towards resolving all those issues. Let's have a what do they call it, hackathon, for figuring out whether it is possible to track and trace all cryptocurrency payments in from a KYC perspective, from a money laundering perspective. What happens if we use Indian soil for categorizing certain investments or certain tradings as foreign tradings? So one can have a, say, I'm just thinking aloud, one can have an entity which has been given a special status, or a bunch of entities which have been given special status to operate cryptocurrency business in a very tightly regulated atmosphere out of the Gift City. And one can permit certain limit-based tradings, and one can see how that sort of atmosphere evolves. And if from a security standpoint, for instance, RBI gives NBFC licenses and other licenses, and there are periodic audits that RBI does to make sure that they are actually doing their work properly. Periodic audits and periodic investigations can be done on these companies, which are anyway operating in a sandbox mechanism. Maybe a monthly, this thing can be done quarterly and half yearly thereafter. And then one can see what are the teething issues and then solve them one by one. But at least there will be a start as against this vacuum that we are in right now. And it's been a few years in this. So at least we start from a particular place and then see where we go from there. And maybe that will also help the regulators understand what all should go into that eventual legislation that comes up. And by the way, legislation is is good for the ecosystem. We must have a legislation, and we must have it sooner rather than later, because that provides the much needed clarity on how to proceed. A legislation that seeks to simply ban it is not good for anyone, not even the government for that matter, because the moment you ban something, and we have seen it in multiple domains, the moment you ban something and public is interested in that, and public considers it to be a valid sort of thing, then they find other ways and means to trade in that. I'll stop here.
Okay, that was quite a mouthful and meaningful sort of submission here coming from Sanjay. But a few ideas came here that, and I think he strongly asserted that a blanket ban is no solution for disruptive technologies coming to the fore. And he also proposed the idea of having a regulatory sandbox, as we saw in the case of fintech, which I think when the government started it has now become the cynosure of all eyes in the world. The entire world is watching how we implemented our regulatory sandbox in fintech, and some of the innovations like UPI is actually being very closely watched by the economies like the UK too. And perhaps India can take a huge step in formalizing a structure around cryptocurrencies. Sudipta, I sort of really wonder what is your view here. This entire narrative of having a regulatory sandbox, and he also mentioned that perhaps some entities could be given special provisions, and he mentioned Gift City and the like. What exactly is your view? Do you sort of agree with Sanjay on some of these ideas?
I mean, regulatory sandbox, I think, is a must-have. I mean, it's a necessity now. If we have spent 4 or 5 years in trying to figure out what is crypto, I think it's high time now we get on with it, so to say. And it is nothing but, so regulatory sandbox, I think, is definitely a great idea. Sanjay gave the example of Gift City. We have had special regimes in a much larger way in the context of special economic zones. So Gift City, I would say, is a conceptual successor to the concept of special economic zones in a way. So we have had those concepts. These are not unknown concepts in Indian law and policy. I think it is time how we craft this to, and utilize this in the specific context of crypto. One specific point that Sanjay touched upon, and I'll spend a few seconds on that, which is the concern about flight of capital. I mean, you asked why this back and forth that we keep seeing. Essentially, it's the fear of the unknown. And in India, one of the specific ways this fear of unknown manifests is vis-a-vis money laundering, or usage of crypto in terrorist or other criminal activities. And that is, I think, one of the things that gets cited again and again. The previous finance minister, the late Mr. Arun Jaitley, also in one of his statements, I remember in 2016 or 17, he highlighted this specific aspect and said that we are not going to allow cryptocurrency to be a valid legal tender, etc., etc. Of course, lot of water has flown down the Ganges since then, but the point is that seems to get highlighted very often as a sort of impediment in terms of a wholehearted acceptance vis-a-vis crypto. Now there are two ways of looking at it. I mean, one is, of course, you ban everything, but then you're just driving things underground. I think if one thing the world has learned in every space of regulation is, if you ban something, if it is useful, it is going to go underground. And it's better to regulate something. We have the Financial Action Task Force, which is like the sort of a apex body in terms of anti-money laundering related policy and regulation. They have published a very detailed guidance on virtual assets and how do you deal with the service providers in this particular space. How do you prevent or at least mitigate chances of money laundering through some of these new assets? And they have come up with recommendations, which essentially, these are detailed recommendations. I'm trying to simplify it as much as possible. What they're talking about is effectively license and registration based approach. They're saying you have to make sure that all the key stakeholders in this are licensed, registered, and there is regular supervision or monitoring by the competent national authorities. As simple as that. I mean, how you do that, how you build up on this one line concept, of course, that can vary from country to country. But we are doing it. I mean, let's take the example of income tax. I mean, say if I have a Bitcoin, I should declare it in my income tax return. If I'm declaring it in my income tax return, then there is some trace of that. I cannot use that hopefully, for a criminal activity. So I think tracking, tracing, reporting, followed by supervision, followed by audits, I think that's the regime one needs to get into. And which is where I think working together, the government working together, Sanjay mentioned a hackathon. I think that's a brilliant idea, but we need probably 200 hackathons, to arrive at something that is acceptable both to the stakeholders as well as the government. Because mind you, we don't need to, when we are doing the policy making today, we are not doing it only for cryptocurrency. We have to keep in mind that blockchain, the distributed ledger technology as it's known, has so many use cases. So we need to have a broad based policy approach for all of these use cases as they come up. We need to be able to look into the future as to what's in the pipeline. And for that, I think a constant exchange with the industry, some sort of a self regulation by the industry. I mean, self regulation we have seen has worked in multiple sectors. No reason why it will not work here. So I think all of these are ideas that needs to be consolidated and work together into a coherent approach by the government.
That was pretty interesting, and a lot of interest recommendations coming from both Sanjay and Sudipta. I do understand, Sudipta, that there is complete consensus to what Sanjay said in terms of regulatory framework, regulatory sort of sandbox for cryptocurrencies also. And you mentioned that this entire tango, which is always there, that there is one step forward, two step backward, primarily with the reason of flight of capital, and perhaps the acceptance is not there. And as you alluded, that there's always this constant fear that perhaps cryptos could be misused for terrorism and other activities. I want to understand other thing that in terms of solutioning, if they were to come from this interesting conversation today, one can say that definitely one recommendation is the regulatory sandbox for cryptos. Second is providing special provisions to organizations like Gift, and the third, what you just mentioned, that have a hackathon. What else are the ideas that come to the fore before we sort of take the conversation forward? And I think I completely agree what Sanjay said, that often in these forums, problems are discussed quite a bit. I think it's high time that we also suggest solutions to the foreground and perhaps assist government in formulating a policy or a framework around it.
Sure. So I think one the most important starting point is to recognize that we cannot look the other way and forget about the problem. I think that's the first step. Yes, it is a disruptive technology. Yes, it is somewhat difficult to regulate. There are all those problems, but the solution is not to look the other way, because the nature of innovation is such that if you want to contain it, it will innovate further, right? So innovation by definition is something you cannot plan for, which is why it is something new, unique, innovative. What you can do is you can catch up to it, and you will catch up to it. The question is how soon or late. Whether we catch up to the DLT technology now and try to regulate it now, or a few years from now, depends on us. Though if we once we acknowledge this fact that yes, we need to do something about it, then how do we go about it? Like, if we acknowledge that yes, there is a problem with my, say, I want to become fitter, I want to do something about my body, the first thing I will do is recognize it, accept that yes, I need to work out. The second thing I will do is go to an expert and ask him to help me do it. I'll hire a trainer, I'll go to gym, I'll read up something, do yoga, whatever. Now those are the people who are probably outside the government more than inside the government. So the government, once it recognizes that there is a problem that they need a solve for, they need to go to the experts. And yes, there has to be a committee of people which should have entrepreneurs, which one category of entrepreneur, one category of evangelists who understand both technology and government. Then people within the government, people from, like we have discussed, there are going to be people from, should be people from Reserve Bank, SEBI, CBDT, GST Council, Ministry of Commerce. There are many Niti Aayog. Everybody should come together and take help of people who actually know it. And as we have seen, during the last second wave of COVID, the global crypto community came together because there were a lot of people of Indian origin who created the atmosphere where they drove support towards the Indian crisis of the global crypto community. And why don't we use people like those and reach out to them on our own? A lot of them, I'm sure, would be more than willing to help the government. After all, this is a country of 1.3 billion people, and a very important, a very important place as a in terms of the world map, where if here cryptocurrency or any form of DLT technology can work, then definitely it will work everywhere else. Once we solve for India, we solve for the world. And why don't we take help of people in India, outside India, who are willing to help the government understand how this can be regulated, how this can be, because if we have five problems that the government has, why don't we go to various experts who can suggest various solutions for these five problems, and then see which one of these work, and then whatever we think this committee might think works can be put into a regulatory sandbox for 3 months, 6 months. We come back with the learnings on the drawing board again, and then keep going back until we find that perfect solution. I think at least we should have a start in that context.
Okay, so there needs to be a more expanded set of stakeholders who should be part of the discussion, and there should
Absolutely.
be and there should be complete willingness to go back and forth to the drawing board to evolve consensus and perhaps also invite disagreements if any. Interesting discussion till now. My last question, really, to this entire narrative is this entire new bill that we have now, the cryptocurrency and regulation of official digital currency 2021, which may be tabled before the parliament. The goal really is to create an official digital currency which can be issued by the RBI. Just given the entire conversation that we've had on cryptos till now, my question really to this panel is that are we ready for this yet? I'll begin with you, Sudipta, and then on to you, Sanjay.
I mean, we are definitely ready. We are more than ready. We have had tremendous success with UPI and various other such digital payment technologies. And the way I look at it, it is nothing but a digital Indian rupee. I mean, the ones that we carry in our wallet, this is a digital version of that. So definitely, ready, and it is definitely a welcome move. There is no doubt. But I think what we should not confuse this with is that this has something to do with cryptocurrency. I mean, it may end up banning cryptocurrency and that way impact it, but I think these are slightly different conversations. The government is welcome and it probably should bring in a digital fiat currency, but that does not impact how what I know all the discussion we have had about cryptocurrency. We need to understand that why did cryptocurrency come into existence? There was a felt need, there was a use case. That use case does not go away just because government is bringing in a fiat digital currency. So we cannot think in binaries. We cannot think that, okay, now that I am bringing in digital currency, ban everything else. There will only be one sort of currency that is available. That doesn't work, and I think that approach is dangerous. And like I was mentioning, that we need to have a very broad based policy approach. And at this point we don't know whether the bill in the final form that it might get passed will reflect a broad based approach or not. Blockchain has hundreds of use cases, and some of them the government is aware of, some of them the government wants to leverage to ensure targeted delivery of benefits, subsidies, etc., etc. So, and blockchain, everything has multiple aspects. So when you use that for targeted delivery, it can come up with innovations. We have spoken about crypto, we have spoken about non-fungible tokens, NFTs. Who knows tomorrow what is going to come up? Unless we have a broad-based approach in the manner that Sanjay outlined, where multiple experts, multiple stakeholders come in and sort of agree. We start with a regulatory sandbox. We explore having a consultation paper. We take regular feedback, and maybe after a while we arrive at some sort of a legislation which is done in a democratic way in its widest possible ramification. So I think that is the way forward. This particular bill, to the extent that it envisages banning of cryptocurrency, might be myopic, might be short-sighted, because as we
Okay,
said, I mean, the moment you ban, it just goes underground.
great. I come to you now, Sanjay, and perhaps this really are the concluding remarks to what we heard from Sudipto. He said two interesting things: is that We should not be thinking in binaries. It's not one versus the other. And if the government starts thinking like that, then whatever work has been done till now goes under the bus. And second, this entire attitude of having a broad based approach should be applicable to other disruptive technologies that come to the fore. I would sort of like the floor open for concluding remarks before we get into a quick rapid fire and serve this interesting conversation.
No, absolutely. I think this will how we deal with crypto in some form will shape the narrative going forward, and India will be seen as a country who deals with innovations in a particular way. This will basically form our opinion for the entire world, and also for entrepreneurs in the country. Like we should also realize that if we create a vacuum like this where our brightest minds who want to work on something as interesting, I I, I speak to a lot of people in the industry. I speak to a lot of youngsters who are in engineering colleges. My own brother is studying, and every techie today is enthused about this entire phenomenon, which is DLT. It is not necessarily trading in cryptocurrencies. It is the innovation itself, and blockchain as a technology is being touted as the next internet. And if we just stay away from it and ban it completely without knowing what we are turning away overall, or what it could have resulted in had we regulated in a particular manner, etc. We may not even know what we may lose out on. We may not even know what we may create in an informal economy slash black market, whatever you want to call it. We may not even know what we have done unknowingly, and therefore I think my biggest concern is that we will unknowingly take steps which are not good for us in the long term. So whatever we do, we should at least know and understand it first in a very holistic manner, and then take a call. And I think this will form the template of how we deal with innovation going forward. If we find one rightful way to, yes, there has to be a solution to it. There has to be a final understanding of how it should be regulated, what should be done. But how we arrive at that will determine where we progress as a tech, a fairly regulated tech society. Because we are already a tech society. We are moving towards a fully integrated tech society going forward. Now, how we reach there will determine a lot of our future, right? And suppose if I my a very hopeful piece here, but suppose in the next 6 months we have a very good regime of regulatory sandbox or whatever it may be. Suppose there is something that the Indian government comes out with, which is really innovative in the way it regulates the entire cryptocurrency ecosystem, and then we give it out as a signal to the entire world that look, this is how we deal with technology, this is how we regulate it, and this is how we provide for support, etc., for people who want to work in that area. And that forms a template. Every new entrepreneur, instead of thinking of going outside the country and doing something outside the country first and then coming back to India and implementing it here, would want to first do it here. In fact, who knows, we may in fact attract people who want to do it in India who don't even belong to India. People, like today we have a problem of retaining our entrepreneurial pool in the country so that they can do their innovations here, they can run their innovations here, and that can help the government and the country in the long term. What Just imagine what would happen if people from across the countries are coming to India, because India is seen as a country which understands technology, which supports and encourages new technologies and innovation, and has a robust regulatory regime. We will not reach there in the next 1 year or 2 years. We will probably reach there in the next 30 years, 20 years. But you have to start somewhere. If India has to become a somebody who's, who people look forward to. See, we are a nation of techies, and we are a nation of people who are good handling money, and cryptocurrency is just that, right? Like people hire Indians all across for their technology work, for their finance advisories, etc. Like we are, and this is the melting pot of all of them.
Amalgamation of, yeah,
It is,
it's
yeah, it is all
amalgamation
of
of
it.
both the talents.
We can't be the nation that bans it, right? We can't be the nation. We have to be the nation that comes out with a unique solution of regulating it and telling the world that look, this is how you do it, and then people should turn to India and maybe we that's how we attract innovation. Now, what we are doing here right now is saying that look, if you have any innovation, please keep it to yourself and please find some country which permits you to implement that innovation. We are not that country for you.
Okay, so
We
that's a
need to
fair
find solution to
point.
that.
Yeah, and that's a very passionate appeal coming from Sanjay here. And I hope the government is listening that if we want to become a fully integrated tech society, especially given India has an ambition of becoming a 5 trillion economy in the next 5 years, we need to be seen by the world as being open, as being one which is having a solution mindset, having a broad based approach to new ideas, and not one which is regressive and has a blanket ban on new technologies and its innovative talent. That's fairly said, and great points coming to the fore by both Sudipta and Sanjay, both the partners of Kitan and Company. Thank you so much for giving us a great sort of rundown on what is the status of crypto in India and what really is the slugfest between the innovator community and the regulator community, and more importantly, the solutions to the fore. Now it's time for a quick rapid fire on the light note. I'll begin with you, Sanjay. How much is your portfolio in cryptocurrency as of today?
I don't have anything.
Someone who's such a big believer in crypto and not investing in crypto, that's like a dichotomy here.
So I once, when I was buying my house, for instance, I reached out to my friends in real estate practice. Buying a house is a very normal thing. They advise day in day out. But and it is like a doctor not treating his own family members, etc. Yes, I have taken exposure once in a while, but I don't have any significant exposure that's worth talking about it. But I know
Sudipta,
I did it. I have also done it to make sure that I know how it works. So it's not as if that I have not I've dabbled with it, I've seen it, but I've also realized, and this is I keep a lot of people ask me because I advise a lot of people in the crypto ecosystem. People ask me that should I pick up some crypto, should I do this, and my advice to all of them is that look, do it first, understand it, and then you do as much as you want it. So and the regulatory sandbox approach actually works there as well, because you need to first do it in small portion. It's like stock trading in some way. You can't be putting money in random stocks unless you understand the stock market and the companies, etc. So I've done it to understand the system, but I don't think I am I can invest that. I don't have the tech capability to understand the nitty-gritties of it, and therefore I don't get too much into it, but I've done some bit of it to understand the system.
okay,
I think
Sudipta,
I
what
got
about
put off.
you?
I got put off fairly early. I think like a year or a couple of years back, there was a boom. And just when I thought, I'll dip my toes, it started coming down. And then I heard a lot of people losing money. So, yeah, I mean, like many middle class Indians, I'm risk averse when it comes to investments. So, yeah, it is a dichotomy. I mean, we are advising, but yeah, I think that's what it is.
Okay. Sanjay, how would you sort of now convince someone like Elon Musk to get back his interest into cryptos and bitcoins?
No, so I think the way to look at it is that it's a very opinionated regime at this point. People are because things have not evolved to a stage where it is like if stock market was around when people could have just raised money for anything that they like. It is something like that. So there are what I feel is that there are great products in the ecosystem where people are raising genuine money, and from what I understand of the ecosystem, those things will do well in future, because those are like your companies which have strong fundamentals, as we call them in normal stock market parlance. Similarly, there are those protocols, as they are called in the crypto domain. There are certain protocols which are really great fundamentally, and people who understand this technology will probably tell you better that one has to distinguish between what is fundamentally strong versus what is just hype. And I think this will become clearer as more and more people understand this ecosystem. And that will just be from basic tech education. Like my background is in law, and therefore I did not have too much of tech exposure. But over a period of time, I have learned some bit of technology, and I know how certain things work. A lot of my other lawyer friends know better than me in some technologies, and people will just catch up. And the moment 5 6 years down the line, 10 years down the line, a lot of people will understand this entire blockchain technology much better, and then they could call a hype very clearly out from, say, a really fundamentally strong protocol. I think that's where maybe Mr. Musk's interest will also. I think he understands this much better than most of us. So I don't think we need to tell him anything about the ecosystem.
Okay.
I think
I
one
think
point I'll
getting,
make.
yeah.
So one small point is, I mean, one of the drivers, at least reportedly, behind Mr. Musk's reluctance is the environmental aspect of it, of Bitcoin, and I think a lot has been spoken and written about that, at the cost of mining the Bitcoin and the high intensity energy requirement. I think at some point, and we are still talking in India, we are still talking about is it permissible or not, etc. At some point in future, hopefully, not too far away, we may need to integrate some of our renewable energy policies to crypto mining, because if crypto is leading to a huge burnout in terms of environment, if Bitcoin mining or similar mining is taking a toll on our energy demand, I think that's one aspect where the policy making has to intervene.
Yeah, and all of this should be part of the regulations, by the way. From my perspective, when
Yeah.
when you look at regulating something, you regulate all aspects of it. So if you think that as a country we don't want to encourage a particular type of activity or behavior in this entire ecosystem, then you probably put, we have extra taxes in some fees, we have prohibitions in other places, etc. But you regulate and you understand what is happening in each domain, and you do what you think is most appropriate for your jurisdiction.
Okay. My last question from Musk to India's guy, Rakesh Jhunjhunwala. I think if we convince someone like him, who's a stock market guru, to at least go on a TV channel and talk about cryptos, I think there'll be a bull run in cryptos. So I think, Sudipta, if you were to be stuck in an elevator and do a 2 minute pitch with Rakesh Jhunjhunwala and convince him about cryptos, because I personally feel that what cryptos lacks right now are more old school sponsors for it. We need more people who are old school thinking to come out in the fore and talk about the technology behind it and extend some support rather than the new guys doing it. So your 2 minute pitch to Chinchunwala, what would that really be? And then we wrap this up.
I don't know if I am capable of making such a pitch to Mr. Jhunjhunwala. And in fact, it's not only Mr. Jhunjhunwala. Even I think Warren Buffett has, famously dissed this entire cryptocurrency
Absolutely.
concept. But I think it boils down to what Sanjay said, that fundamentally, is it strong? Is there some worth in it? And I think that's what, I mean, whether it's an old school guy or any prudent investor is going to look at it. I think the way we need to pitch it, or the way we need to understand it, is that distributed ledger technology is the future, and there are no, I don't think that point is debated, and cryptocurrency is one of the use cases of that. Maybe some of the valuations that we saw last year or so, that was inflated, but that happens even in the stock market. I mean, there has been a lot of theory about valuation vis-a-vis some of the recent IPOs that have happened. So I'm saying there are bubbles in every sphere, in every commodity, every asset class. So bubbles, I don't think per se is a reason why one should stay away from a particular asset class. Cryptos as a as a asset class, there is a very significant use case, which is why every passing day it's multiplying by several degrees, the usage of it. So I think staying away from this probably is not the wisest choice in that sense. Like Sanjay said, you don't know what we are going to miss out on, and crypto is probably one manifestation of a blockchain use case, with NFTs, etc., all of those things coming in. I think it is high time to invest. I mean, I don't know if that's a 2 minute pitch or whatever, but I think that's why one should look at it.
Okay, before I wrap up, Sanjay, any last concluding sentence or last word from you
No, so I think high time we really figure out a way to work together on this. There is a lot of interest, and we have seen it. Like anything to do with crypto gets immediate attention, and I think it's high time that we get this interest culminated into some action on the part of the government, which should be somewhat open. I think the government is actually doing its bit. I empathize with them because the problem is very difficult for them to solve, but I think at the same time they should probably reach out to, or maybe allow people, or if it's already happening, great. If it's not happening, I guess people from the industry and the government should work together and find some sort of a solution, and in small measures, get some solutions going very quickly, and if there are any fallacies, we should learn from them and implement something new.
Okay. Thanks, Sanjay, and thanks, Sudipta, for your time and energy to this wonderful conversation. We had this amazing Mint RegTech conversation platform created in partnership with Kitan and Company. And to our audiences who are so patient and listening to this, please stay tuned in for the next episode to discuss some interesting ideas to open for debate and discussion. Till the time I see you next, goodbye and good luck. And thank you so much for joining in. Thank you.
Thank you.
Thank you.
Thanks.